Hello traders, this is Rich from Tradesight. This is the market preview for Wednesday, May 21st, 2014. We had a pretty weak day today on the top line, and the internals, or the bottom line, if you will, was extremely weak. Here's the takeaway from today: the ES was lower by about 14 on the day. Nasdaq was lower by only 16, which gave Nasdaq a relative strength nod. But there was a lot of damage in the Russell today as well. Didn't make a new low close on the move, but the Russell was down twice as much as the broad market. In the market internally was weak across the board. Minus 1,250 issues on New York, minus about 1,500 issues on the Nasdaq side, and the trend was at 2.08, which is going to start to elevate our 10-day average, which is something that we're definitely going to take a look at tonight. Let's start tonight with the weakest to the strongest today. Here's the Russell 2000. You can see that we're only 4 bars down. We still have this negative bias in place here. We're below all 3 major moving averages, below the 50, the 10, and most importantly the 200 period moving average. Haven't really released below the 200 moving average and made a new move below it, but we certainly could do it because we don't have any problems with the bar count. We're only about 4 bars down in the startup phase. If we do continue lower, we're going to be talking about the 0 ace level as the next meaningful area of support. And the key thing is that's going to be undercutting the February low, which is definitely going to be a notable development if that does happen. To the top side, if we do rally back up, previous day's high is going to come into play, and then more importantly, the 200 period moving average at 1117.5. Next up, let's take a look at the ES, which was second weakest on the day. Basically trapped in this little mini weak range, right around this 1875 area. This has been really prominent for many weeks right now, and until we release out of this area, there's really nothing new. Note that this little gap is still open to a degree. We haven't reached up and filled this gap on a closing basis at 1885. And to the downside, we're going to have important support here at the 50 period moving average, and if we lose that, we're going to be talking about much lower levels here. But for now, the market's doing what you would expect it to do. We had a 1 through 13 exhaustion print that was fairly lateral, marking the end of the impulse, and now we're just going sideways. Here's a look at the Nasdaq futures, which were relatively strong on a compared to its peers, but we settled right back down to that 4 ace level, which is no surprise since we're right in that area. That's obviously going to be a big draw. One of the important features that the market did do was it used the 50 period and a 10 period moving average for support intraday and held on to that. So tomorrow, if we can break out above this area, we're definitely seeing some positive things here with a little bit of relative strength. The MACD, as we've talked about before, is above the 0 line, which is positive, but still need to make good on this and clear these more recent highs. TLT today was much higher intraday, but ultimately got kind of pulled back down to that 0 ace level. We did close below the midpoint of this big down candle, so we're still short-term positive, but could easily flip back to short-term negative. And keep in mind that would be a bullish development for the overall stock market if that did happen. Oil futures were up again today a little bit, but still contained below the static trend line, which is the real thing to keep in mind here. Until we break above the static trend line, this is really just range trading back and forth here between this roughly the 2 ace level and the 7 ace level. Gold futures just kind of meandering, really didn't do too much today as far as net price change. It did recoup a drop intraday and settle kind of really in this very tight area. One thing to do is make sure you keep in mind that gold here is kind of putting people to sleep, but it's really wound up with energy right now because we've been trading so very tightly. So when we do release out of this area, there's going to be some good energy to it. So make sure you're willing to play that if we do start to release out of this range. Here's the multi-sector daily chart. XAU was weak again today. Banking index was also fairly weak, and we'll look at that chart, but it was actually pretty weak today. They did give it a bit of a bounce at the end of the day, but it was not very pretty. The oil services was weaker on the day, but really not as much price movement as the overall broad market. So it actually was kind of a place where the bulls didn't get beat up too much. We do have this double top in place now in the transports. We rolled down fairly aggressively today and did see some loss of ground there. Here's a look at the 10-day trend. We did close the trend above 2 today, which is a very high reading. We're not up to the oversold area yet, but we could get there fairly quickly. We're at 1.24 now. 1.35 is that area where you really want to be careful. We've got enough oversold energy in the tape to warrant a bounce. We're not there, but that's definitely something that could happen, especially with that 2+ reading that's going to carry on for almost 2 weeks now, going forward in the 10-day average. Here's the ratio chart of the NDX versus the SPI, so you can see that the NDX is starting to climb now. Ratio chart is on the rise, meaning that we're seeing some relative strength in the NDX versus the S&P. So this is definitely something that the market will need to happen for the broad market to hold up here. If this starts to falter again, that's where we're going to start to see some real problems in the overall S&P. But for now, need to make sure that this continues on the rise after the rotational selling that we've seen and a lot of the profit taking that we've seen in the NDX. Here's a look at the sector watch list, ranked from best to worst. Cyclicals on the top. Utilities were fairly strong. The oil services was lower on the day, but definitely outperformed the broad market. Transports were actually a little bit weaker than the broad market, and definitely don't want to see them start to really roll over here. The BTK was fairly weak after having a bounce back day yesterday. So a lot of churning going on right now, but one good takeaway today was that the oil services was weak, picking up some slack from the transports. Here's a look at the oil services, the OSX. Still just holding above this 4-ace level, which is a positive. We're below the 50 period and the 10, which keeps us short-term negative. But if we can pivot back above those, we'll be talking about this 8-ace level and the static trend line coming into play. To the downside, there's going to be key support here at the 200 period moving average, about 277.5. The transports are the next thing we want to talk about because of the relative weakness today. Got that this little double top in place here. It's not really a great double top in the scheme of things here on the daily because it's too tight. But for now, using this 8-ace level for support and kind of hanging in there. Definitely a poor day today, but we need to see the transports hang in there to keep the broad market rolling. Here's a look at the BTK. BTK is still really lateral here. It was a weak day today, but essentially just inside the previous day's range. So once we resolve this range one way or another, we'll have some clarity and also a tradable move. So make sure you mark off the highs and lows from this 2-day range. And when we do break out of that, make sure you're ready to have some things to play. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.